head of FICC at All-Star Charts. Mr. Culley, how's your day going so far?
Beautiful. Had a nice morning hanging out with you and Straza on the
That's
morning
it.
show.
That's it. Always a fun time when you get the two of you together. All right, this is What the FICC, the show where we talk about fixed income, commodities, and currencies. So let's get right to it. Start with our market recap. We'll start with gold as we always do. Mr. Culley, what are you thinking here?
I'm bullish. I'm still bullish gold despite the near-term weakness that precious metals recently experienced. As long as gold is above those 2011 highs that mark the prior commodity super cycle peak for gold around 1924, I like it long. Initial upside objective up around 2,500. And what's really interesting is that the bulls came in and they supporting higher prices, driving price back above those early pivot highs around 1975 from earlier this year. And now gold's trading up close to 2,000 today. So I like gold. I like precious metals. And I like the fact that the bulls came and stepped in when they needed to. Very bullish evidence here in favor of the bull case. GLD still trading to below its respective 2011 highs. If and when GLD gets back above 185, 185.50, I like GLD long towards 240. I think it's just a matter of when, not if, as long as gold continues to catch higher. And then looking at GDX, I shared this earlier in the week on Wednesday, peaking at the monthly candlestick that found support at a logical level of former resistance. This is polarity 101, and now GDX is catching higher. So as long as GDX is above 30, I also like it long. With the understanding, bigger picture, we zoom out over a decade here, and we're still beneath a downward sloping trend line. So precious metal mining stocks still have plenty of work to do. We got to keep that in mind.
All right, crude oil here. Oil prices continuing to fall. What say you? How you feel?
Feel neutral. I mean,
Right.
stuck in a 6-7 month range. Lower, earlier this week, crude was dropping big time. Down 2.5% one day, down another 2% the next day. But then today, it's up 2.5%. So it's range bound, it's messy, as long as it's above 65, there's no real strong bear case. We can look to the intermarket evidence, we can look to all the intermarket ratios, or just the weakness across cyclical and value oriented assets, and point to the possibility of lower rates and how that would negatively impact crude oil prices. So far, we just haven't seen it. So as long as that's the case, neutral crude oil, if and when it gets back above 74, I like it long towards the upper bounds of this range. For now, it's just a no touch. Now, the US oil ETF, as long as it's above 58, got to give it the benefit of the doubt. If and when it falls below 58, the path of least resistance is lower. Crude's probably below 65 in that environment.
All right. What about your old favorite, Dr. Copper?
Dr. Copper. Neutral Dr. Copper. Obviously it's rolling over. It broke below its pivot highs, its August pivot highs. It's interesting. We look at tech stocks right now. Whether we're talking about the equal weight tech index, or the Qs, or Sky Cloud Computing, the Sky ETF, SKYY. And we look to those August pivot highs as a marker. And that, above those August pivot highs symbolizes the completion of rounding bottoms or reversal patterns, bearish to bullish reversal patterns. Now we look at copper futures. Copper futures just resolved below the August pivot highs. So, it's tough to be bullish near term. On the other hand, it looks a lot like that gold chart in that bulls are stepping in. See how the bulls stepped in and drove prices higher for gold? Might be seeing the same thing here for copper. So I've got my eye on copper, neutral outlook. It did hit oversold, but didn't hit oversold on this recent down leg. So, could I draw a bullish divergence here and momentum down at the bottom? Yeah, maybe, but I think that's kind of grasping at straws. Freeport-McMoRan. This is one for the bulls here.
All right.
Broke down last week, right? Broke down last week. Bulls stepped in and are supporting price above 34. So that's definitely a positive, constructive development for the bulls when it comes to copper.
And what's this next chart? Is this it's a 10-year, but do you look at this as more of a statement on the 10-year or a statement on commodities or both?
Both.
Okay.
And that kind of gets back to, if, there's a lot of evidence that has been pointing to lower rates, but, they haven't rolled over yet. And same thing with commodities. We're seeing some breakdowns in the commodity indexes, broad weakness. That's why we have our equal weight 33 commodity index here in the upper pane. We take 33 individual contracts and weight them equally. So 15% energy, predominantly ags here with 48%, a lot of grains and soft contracts, precious metals at 12%, and industrials at 24%. Whereas you look at the CRB index, which is heavily geared towards crude oil. Crude oil is by far the single most important contract or heavily weighted contract in this index. So almost 40% energy here. So that's a big difference. But equally weighted index is breaking down. If we continue to see weakness hit crude, I imagine CRB index is doing the same. This equal weighted just speaks to broad weakness across the commodity space, which you would think, if these cyclical inflationary assets that tend to move with rates are breaking down, that rates should probably break down as well.
We'll see. Let's talk about that right now, because rates, maybe you could say we're hinging on a potential government shutdown as pertaining to the debt ceiling. That's off the table now. Debt ceiling has been resolved. And what are the rates market telling you?
They're easing. They're easing. Rates are easing. People are going back out and buying treasuries. I think there was a big move away from treasuries because they were risky. And we, bought into the whole drama around, whether or not the government was going to be able to come to some sort of resolution on the debt ceiling. And what we were talking about earlier this morning, at one point, was it the 1 month T-bill was, the yield for the 1 month T-bill expiring in the first week of June was something up around 8%.
Annualized, yes.
Annualized. It's, so that's crazy. That's crazy. High. So, I think, we're past that. Rates are starting to roll over a little bit. We're seeing assets that are benefiting from easing rates, like gold, start to catch higher. Interestingly, crude's having a good day today. So yeah, it's, again, when you zoom out though, I thought this was really funny, kind of interesting. I'm not trying to draw any conclusions on the correlation between the 30-year yield and live cattle futures. We'll just have live cattle futures on the chart to play devil's advocate. We have all this information pointing to lower rates, but if you just look at the 30-year yield as if it were a risk asset like cattle futures or any risk asset you'd like to choose, it's just a base on base on base formation. This is a strong uptrend that is still intact. And it's good to take time to zoom out and and revisit that fact. So we'll see until rates roll over, until they break down, they're below those June pivot highs from last year. There's really not a whole lot to talk about in terms of the next directional move. It's sideways, and you know what? That might be that. It seems to be working for tech stocks. It seems to be working for the equity market. So maybe sideways is the best option right now.
All right. What about the U.S. dollar? Are we bullish? Are we bearish? Are we neutral?
Neutral with a bearish tilt.
Okay.
How's that? Does that work?
Yeah. Why is that?
I really like, Jason was on the show this morning, on the morning show, and he called the dollar. He pointed out a pattern on the dollar index. He called it the fallen angel pattern, and I've never heard of it before, but I really liked it. And it was, the way he described it, you have this strong rollover, the strong kind of move lower after a parabolic advance, and then you get this rally that tries to get back up towards those former highs, doesn't really get there, and then you have another rally that doesn't even make it back to the previous rally. So you get a lower high here. And I think that lower high just speaks to overhead supply, and it just speaks to selling pressure and just an overall kind of bearish outlook, bearish bias on my part. But again, can't really get behind a weaker dollar with conviction until a downside resolution of the dollar index below 101. That's my level. UUP, it came back up. It retested the former highs from March earlier this year. But now, finding resistance. That was an interesting divergence between the dollar index and UUP. Also, UUP hit an overbought reading. We did not get that on the dollar index. I like to follow DXY.
Any notable forex currency pairs you want to call out?
Yeah, some of the divergences that we saw, in terms of the dollar index or G10 currency index and the US AD line, that were kind of pointing to a rally in the US dollar index, are kind of they're starting to break down. We saw a higher high and a higher low in the G10 currency index. And the main difference between this index and the US dollar index, DXY, is that we add the New Zealand dollar, Norwegian krone, and the Australian dollar, which are three commodity-centric currencies. It's really the only difference here. I noticed our US AD line of $29 pairs did not reach a new high. It's still coiling sideways, not unlike the dollar index. And when we look at commodity-centric pairs, these commodity-centric currencies, we've seen weakness over the past few weeks. That speaks to that weakness that we're just seeing in commodities. Right. So I think that this divergence here actually has a lot to do with the weakness that we're seeing across the commodity space. I don't want to jump to any conclusions simply based on this higher high in the G10 index that we're going to get a rally in the dollar. So still looking bearish for the dollar, but we need to see that breakdown. It needs to get below 101 before we get excited.
Did we have any sleepers this week? Any charts that are base building but not quite worthy of full attention just yet?
No, not really.
Okay.
No, I didn't bring any charts today.
Cool.
I'm thinking about just updating and keeping the ones that I've shared in the past.
Yeah.
And keep bringing them back up because cotton's getting close to breaking out. And that was one of our sleepers.
Yep.
Awesome. Cocoa's still kind of grinding higher, and just keeping the sleepers in the mix and checking in on them regularly.
Yeah, we should. Let's make a note to check in on those next week. All right. What about I titled the show here "Why I'm Bullish Uranium." It's really why you are bullish uranium.
Yes.
So maybe let's bring up that chart if we can, and tell us about it and tell us why you're bullish uranium.
I'm bullish uranium for a few reasons. And, one reason is that it is holding this support level, this former support level around 1850 that coincides with this 2016 peak. And it's a big level. It continues to hold that level. And when you zoom in, it just looks like a constructive basing formation. Now, it could have plenty of room to go. This uranium ETF most likely has more basing to do here. And as I really don't want to have anything to do with URA until it gets back above 2450. If and when it does, I like it long towards the October pivot highs around 31, 32, and the secondary objective up around 40. Now, I like uranium for the same reason I like precious metals, for the same reason I like, precious metal mining stocks. If these areas in the market, if gold's going to be ripping towards 2,500, then uranium, copper, even rare earth metals, a lot of those, areas of the mining space that aren't front and center, like Freeport-McMoRan, are going to be catching higher. So I really like uranium. I like the way it's setting up. Yesterday, URA closed, was it up 6%? URA was up 6% yesterday. And CCJ, the bellwether, this is the leader of the space, was up 10% intraday. I think it closed up somewhere around 8.5%.
Was there a reason for that?
This nearing a breakout. I really, really like this chart a lot.
Was there a reason for that breakout, or just technical?
I don't know. It's technical. I focus on the technicals. I focus on price. I mean, we saw some strength in gold and precious metals, and I think if we continue to see strength in those areas, if gold's reclaiming the pivot highs from earlier in the year and catching higher, then that's an environment that's going to benefit. That's an environment that's going to benefit CCJ. I think that's what we're seeing.
You like uranium, but you would much prefer CCJ over the uranium ETF.
Yes, absolutely. Absolutely. Because, when we look at the URA, CCJ is, almost 30% of this ETF, if not more. But there's a lot of smaller, more speculative names baked in here. And I'd rather just own the leader, own the strongest. And then also just look at the two charts. I just really, really like the way this chart's looking. It's closer to breaking out. Again, we talked about this earlier this morning. Yeah, I like CCJ, but I don't want to get long until it's above 33. Right? This is, still stuck in a range. Yeah, big day yesterday. I haven't checked the tape yet this morning. Again, I'm not interested in getting long until it's above 33. If and when it takes out that level decisively, I like it long, targeting those 07 highs around 55.
All right.
Nice trade setting up here in uranium. I do like it.
All right, we'll have to keep an eye out at the rate it's going. Maybe next week we're looking at 33. I don't know. Let's move on to a new segment we're going to try called Would You Rather? Ian, I'm going to give you a couple of markets. You're going to tell me which one you would rather buy right now. You ready?
Yeah, let's do it.
All right, for this week, let's do silver or copper. Would you rather silver or copper if you had to buy one right now?
I have to buy one right now. Silver futures. No, I really like silver futures back above 24.75. Or copper.
That's it.
I mean,
or neither.
Or neither. No, I gotta pick one, right? If I gotta pick one, I like precious metals. I just like precious metal space a lot. And, I look at these two charts. They look pretty similar. Don't they look really similar?
I'm going back and forth myself, and there's silver, there's copper. Yeah, they do.
What?
Yeah.
I'm gonna go with silver for one reason and one reason only, and that's because it's above its August pivot highs. It's above its August pivot highs. It's closer to taking out that shelf of highs, this polarity zone up here around 24 3/4. The shelf of former highs from earlier this year. We look at copper. Nah, copper's still stuck below those August pivot highs from last year. Copper has more work to do. Copper has more work to do. And if the mounting evidence suggesting that rates are going to roll over, and they do, silver's more likely to benefit in that environment.
All right.
We'll see.
Silver or copper, and Ian picks silver for now. Yeah. For now.
I like gold's crazy cousin.
Yeah. Hey, look, I'm all for volatility, right? So if silver is going to move, I'm here for it. All right. Ian Culley, head of FICC at All Star Charts. Was there anything we didn't get to that you wanted to get to? Or no, I know we had more charts.
No. Oh, I wanted to get to one chart. We had a request on Wednesday,
right,
for gold versus Bitcoin, and I just wanted to show that chart today. So this is gold futures versus Bitcoin, and I see the relative trend flipping higher from a bearish to bullish reversal here in 2021 into 2022, and it still remains intact. We got a nice retest of this base breakout from last year, and it's holding.
So wait, interpret this chart for me. So gold is the numerator,
yes,
right? Bitcoin is the denominator. So what this is saying is basically since, what would you call that, middle of 2021, I suppose, or even earlier, gold is outperforming Bitcoin.
Yes, absolutely. So when the line is going up, gold is outperforming Bitcoin. When the line is falling, Bitcoin is outperforming gold. Now, again, this is just a ratio chart. This is about outperformance, underperformance. It's not about absolute trends. So the line could be falling, and gold and Bitcoin could both be trending higher on absolute terms, and vice versa. This is more of where is your money being treated best between these two assets?
And so what the right side, what the end of this chart is really saying to you is that gold has been outperforming Bitcoin for a little bit here, but you see that maybe changing.
I do not see that changing.
Oh, you don't see changing. Okay.
I don't see that changing. I see that we got a nice healthy retest of the breakout from last year. A relative breakout for gold versus Bitcoin. And in the lower pane, we have a 14-period RSI, this 14-day RSI, and the momentum has been improving. Yes, it hit oversold earlier this year, beginning of the year, but momentum has been improving in favor of the bulls, in favor of gold versus Bitcoin.
Yeah.
So I like gold. No secret.
You said off the top you were bullish.
Yeah, I'm bullish, and that's one of the few areas today that I believe that I've been bullish.
I've been keeping track. You're right.
You had to twist my arm. You had to twist my arm on silver, but.
All right. That'll be it for our episode today. Thanks for watching What the FICC. This show airs every Wednesday and Friday at 11:30 a.m. Eastern Time, right here on Stock Market TV. I should also mention that Ian, as the head of fixed income, commodities, and currencies at All Star Charts, is part of the team that is searching far and wide every day for that one perfect chart to send directly to your inbox. every weekday. I'm talking, of course, about the All-Star charts, chart of the day, email. It is free. If you want to get the All-Star charts, chart of the day directly in your inbox for free every day, you can use the URL that's on the screen. There's also a description in the video or below the video on YouTube. You can always also call. There's a number there, right? 323-421-7910. But for me, I would use the website and just go to that link, enter your email, and you will get the All-Star chart of the day sent to you every single day for free. And that's what I got. Any final thoughts, Ian?
Just have a great weekend. Get outside, enjoy the weather.
Summer is here. We're getting outside. Everyone have a great rest of your day. Have a great weekend. We will catch you next week here on What the FICC.
Thanks for watching.
Coming soon.